Today is the day. Ripple Swell 2025 opens its doors, and the guest list alone tells you how serious this moment is. Global asset managers, Tier 1 banks, policy voices, and enterprise fintech leaders. The question isn't, will the hype be loud? It's which signals actually matter for XRP over the next quarter. Let's start with the timing and the mood. Swell is designed as a business conference first and a media moment second. That means meaningful updates tend to arrive in measured language. Product expansions, pilot results, client case studies, and new rails going live. If you're waiting for fireworks or price theatrics, that's not how institutions move. They show roadmaps, controls, integrations, and compliance pathways. That's the signal. What am I watching for first? Tokenization. The world's largest asset managers have been crystal clear. The next frontier is putting real-world assets on-chain, with institutional-grade custody, settlement, and reporting. Ripple has been stitching this together. Enterprise wallet infrastructure, regulated custody partners, and a prime broker-style stack to route liquidity, manage counterparty risk, and execute at scale. If we get specifics today, new issuers, new venues, new jurisdictions. That's a genuine accelerator for utility on XRPL. Second, stablecoin strategy. Expect updates on how dollar and euro rails tie into on-chain treasuries, payouts, and cross-border settlement. If Ripple expands minting partners, on-ramps, or payout corridors, that's not just narrative. Those are the pipes through which volume flows. The more compliant fiat bridges you have, the faster real commerce can move over XRPL without frictions. Third, prime services. Institutions don't adopt crypto with retail tools. They need consolidated execution, smart order routing, credit frameworks, collateral management, and audited custody. If we see clearer packaging of that prime layer, think upgraded workflow for banks, PSPs, and funds. That's a green light for bigger tickets and repeatable flows. Now, the big speculation, NDAs and huge name partnerships. Could a confidentiality veil lift today? Possible, but temper expectations. Institutions often keep NDAs sealed until production volume is undeniable or regulatory sign-offs are complete. My base case, a low to moderate chance of 1 or 2 concrete logos, and a higher chance of we're live with the top X bank /PSP in region Y without naming the client. If we do get a flagship name on stage, that's a bonus. What about ETFs? Don't expect anyone at Swell to pre-announce a regulator's decision. What you could hear is the kind of language institutions use when they're aligning infrastructure. References to index products, EP distribution in Europe, or demand signals from wealth platforms. That's code for we're preparing the rails so that, when approvals land, the machine is ready to scale. JPMorgan, Citi, BlackRock, and friends. Why does their presence matter? Because it signals alignment around standards. ISO 20022 messaging, risk, compliance, and operational controls that make on-chain settlement enterprise safe. If panelists emphasize tokenized funds, T+ instant treasury use cases, or automated cross-currency flows, that's a direct tell-on where the first big volumes show up. Corporate payments, treasury sweeps, and high-velocity B2B. Let's talk probabilities so you can calibrate your expectations. A meaningful product or partnership update, moderate to strong likelihood. Concrete tokenization issuers or corridors going live, moderate likelihood. Major NDA unsealed with a Tier 1 bank on stage, low to moderate likelihood. Explicit ETF news, low likelihood. Hints about infrastructure, moderate. U.S. policy soundbites or regulator participation, moderate likelihood, framed as compliance and market structure progress. What would count as a true win for XRP holders today? Not a price spike. A win is clear, verifiable expansion in institutional plumbing, more custody integrations, more compliant fiat on off-ramps, new tokenized asset programs, and a bigger, safer prime execution stack. Those unlock durable volume, not fleeting candles. What if markets dip during the show? It happens. Macro headlines, funding unwinds, or rotation can drown signal in the short term. Don't confuse market noise with product progress. Institutions judge by controls, uptime, SLAs, and audit trails, not by 15-minute candles. Here's how to navigate the day like a pro. First, separate marketing lines from operational facts. Names, jurisdictions, counterparties, and go-live dates. Second, track follow-through. Developer docs updated, partner pages live, sandbox access open. Third, map each announcement to a segment. Remittances, corporate payouts, trade finance, tokenized funds, or treasury. The segments that get the most concrete detail are where near-term volume likely lands. Bottom line, Swell is a utility checkpoint. If we exit today with stronger tokenization rails, clearer stablecoin corridors, and a firmer institutional stack, the thesis is advancing, quietly, professionally, and in the only way that scales. Whether or not an NDA logo flashes on a slide, the proof you want is pipelines, pilots converting to production, and partners committing to volumes under compliant frameworks. That's how real adoption happens. And that's where XRP's long-term value accrues. Stay sharp, filter the noise, and watch the plumbing. That's where the future gets built.